Thank you for that introduction. Good morning, everyone. My name is John Whittaker. I'm a senior editor at Investment Monitor, and I am delighted to be moderating this panel on the driving change in investing. We have a fantastic panel here with us today. I'll introduce them each in turn. First of all, we have Oyi Chu, CEO of ADDX. We have Simon Goodman, CEO of Peregrine Limited, and Mehdi Fishtali, founder and CEO of FinAmaze. Welcome to you all. So as the intro said, there's been huge amounts of change in financial markets over the last decade, and we're lucky enough to have some speakers here who are really at the cutting edge of some of that change. So without further ado, I want to turn to Oyi and ask you to tell us a little bit about ADDX and how you're seeing Fintech driving change and introducing efficiency in the work that you do.
Thanks, John. It's really great to be here and feel the excitement in this room about the future of Fintech and what we do. So my name is Oyi. I'm the CEO of ADDX. ADDX is a Singapore-based platform, and we do tokenization for securities and funds. And our mission is to democratize private market investing for the mass affluent and individuals. And so we've taken a whole series of PE funds, VC funds, hedge funds, credit, and tokenized that. We've been able to fractionalize that using blockchain. And of course, this panel is here to talk a lot more about what tokenization and blockchain is doing to the wealth space, and democratization is, one of our key themes here.
Okay, great.
Hi, Simon Goodman. I head up Peregrine Limited, and it's a pleasure to be here today. Peregrine is a digital asset marketplace, which essentially brings asset managers and asset owners together with investors in bringing, through tokenization on the blockchain, bringing liquidity to a lot of the private asset marketplace.
Great. And Mehdi, introduction from you, please.
So I'm Mehdi Fishtali. I'm the CEO and founder of FinAmaze. FinAmaze is proudly based here in ADG app. We have a category 3A license in asset management. And what we do is we offer to our clients, to each of our clients, the solution that is the most suitable to him. Think of it as a discretionary managed portfolio, but that starts for a few $1,000s instead of a few $1 million. This solution allows each client to have the portfolio that will allow him to have the investments that are related to his risk profile.
Brilliant. We should probably address the elephant in the room. There's been a lot of market volatility, to say the least, in recent weeks. So I just wanted to ask each of you how you're seeing the expansion of tokenization in the market, and particularly in the secondary market, and how that is being affected, I guess, by recent volatility.
Well, that's a big question, and there are obviously a lot of subtopics below that. But I think what's happened in the last year or so has really shown that public markets can be extremely volatile. And I think what it's doing is accelerating the thinking about how private markets could be added onto an individual's portfolio to manage some of that volatility. So portfolio diversification into private markets. I think the real question there became, but how does an average individual access private markets, right? The PE fund or the VC funds all start at $1 million subscription sizes. So it's almost impossible for mass affluent, let alone retail, access that, right? So even the world says today the rule is 80-20, public-private. There really has been no mechanism for that to express itself in its full form. And platforms like ourselves and Simon here would be thinking about how do we democratize that, break that down so that the average individual has access. So there's the private markets piece. Obviously, what's complicating the idea of tokenization today is what's happening in the crypto markets. And I think all of us here want to understand the difference between cryptocurrency and blockchain. And we ourselves, for example, we don't have cryptocurrencies traded on our platform, even though we use blockchain to really create efficiency around TradFi products. So the way we're set up is a bit more serving traditional finance products, but opening up a different market. So I think the volatility in the crypto space is probably distracting a little bit from the whole blockchain and financial innovation conversation, because a large part of the wealth actually is still in private markets and public markets, and crypto is just sort of another sleeve of that, but a much smaller sleeve.
Yeah, and Simon, you would agree with that, I guess, in terms of what you do. It's a distraction. It's slightly separate to
yeah,
the main conversation.
To be perfectly honest, I mean, I agree with what Oyi said. I think, you know, I personally am a huge advocate for crypto. The first fund that we put on Peregrine in the ADGM was actually the first regulated fund, which we tokenized here, which was a crypto digital asset strategy. And clearly what's happened in the short term is not helpful. You know, let's assume that it's, you know, it's criminal, it's fraud, and that shouldn't, that is a distraction from what we're doing from a kind of blockchain tokenization effort. I think from a crypto perspective, I think it's good and bad in a sense that it will delay the on-ramp of institutions coming into the space. Education efforts need to be doubled down. Regulatory focus will clearly be at the center of attention. And that's going to take time. The flip side is that I think it forces the lens to really look at the crypto space, to look at well-regulated platforms and institutions and how assets can be safeguarded, and some of the kind of security and controls to prevent some of those fraudulent activities will be very much under the microscope and will actually, you know, propel advancements in the technology and in adoption in the longer term.
Absolutely. And Mehdi, your thoughts on that, I guess particularly around education and widening the understanding of the products on the market. I mean, what's your view there about how that's likely to evolve and has been impacted by recent volatility in the market?
Yeah, sure. This is a very good question. And actually, beyond allowing the average investor to understand how the market works, the idea is also to bring the markets to him or to her. So let me say it differently. In the current asset management industry, what do we have? We have an asset manager that manages a fund, let's say, of $1 billion, and then you have 10,000 investors invest into this fund. The fund manager takes decision on what to put and what to rebalance, what to change in his fund, depending on some metrics for him that are suitable to him in order to maximize the performance of the fund. But while doing so, all his decision will trickle down to each of the 10,000 investors in our example the same way. And the real question is, should they all have the exact same allocation of the securities in that particular fund? Aren't we putting too much pressure on the individual investor so as he should be the one who will take the risk or mitigate the risk of investing that much in fund A, that much in fund B, that much in fund C? Isn't there a better way that will allow an investor of a fund do what he wants to do, but at the same time having his decisions translated into each client depending on his risk profile? The answer exists. It existed since the 1980s. It is called discretionary managed portfolios, whereby an investor would come to a private bank and the private bank will dedicate an asset manager for that particular client for all his investments, and that particular fund manager will allocate the portfolio of that client accordingly. Guess what is the ticket size? Millions of dollars. Very easy. You go to a private bank, tell them that you want to open an account, they will tell you 7 figures or we will not be banking with you. So how can we do it to lower scale? And this is an important question because it takes time to allocate or to build a portfolio for each client, regardless of the size, $20,000 or $20 million. Now, how can the technology, how can WealthTech help solve this problem? And here, this is our thesis, is hybrid asset management. So how does it work? You keep on having the current model where you will have a fund manager building his portfolio in the way he wants, basically choosing the securities and allocating a target weight for each of the securities. What you will ask him to do is to widen the weight of each security into a range. And then we let the machine, thanks to a phenomenal computation power, adapt and choose the weight of each security for that given client. In other words, the fund manager with the same effort will not be managing $1 billion fund. He will be managing 10,000 independent and unique micro funds, a micro funds per client. And this is doable today. Why? Because the AI is the one that will translate the strategic level decisions of the fund manager. And for us, we consider that the strategic decisions can be well taken only by human beings. But when it comes to slashing them, to translating them into small micro portfolios, that requires a lot of computation, and the machine is much better than us. So humans for strategy, and the machine for the tactics. The human for the strategic allocation, and the machine for the tactical allocation. So as each client will have his micro portfolio, and therefore, you lower the level of knowledge, the level of education that each client needs to have, because the machine is taking care of bringing the micro portfolio that he requires, given his risk profile.
It's true democratizing of investment. Well, that's the aim. People talk about that being an ultimate aim of fintech, and I think when people think about that, they typically think about cryptos, right? But I mean, what you're talking about is the ways in which AI can actually widen the pool of investors, lower the barriers for individual investors, and I guess you see this just as the start of something that could be much
Correct.
bigger.
Fintech will bring not only access, but will give personalization. Who among the investors wants to have his fund mingled with another $1 billion? People are looking for personalization, and today we can deliver it thanks to technology across asset classes. Crypto, that's just an asset class, but still forget it for the moment. But we are talking here also about public stocks. We are talking about diversified strategies, about long-short strategies, about hedge fund strategies. And on our platform, we also offer private equity, starting only from $10,000. And here, perhaps the link with my fellow panelists on the tokenization. But when you tokenize a private equity, that means that you can do it at a fractional level, and therefore, when you have a client who tells you, I want to invest in private equity, instead of telling him $1 million minimum ticket size for fund A, 1 million minimum size for fund B, what you will give them here is the ability to basically choose a token for a small bite here and a small bite there, and have basically a portfolio of a few $1,000s. And this is how the future of investing could work, particularly with the tokenization.
Yeah, and want to ask the other two panelists about that. Obviously, that's from more the retail side, but from asset management. Want to go back to a debate we were having backstage about whether this tokenization is illiquid or a liquid asset. Some interesting views on that. I don't know who wants to pick up.
Well, I'll go first. I think when we looked at the challenge, we looked at a particularly difficult challenge, which is how do you take a PE fund or a VC fund and make that applicable to the average mass affluent investor, or at some point the mass retail investor. And therefore we looked at the technology to solve that, because traditionally these funds were designed for institutional capital, which had different decision making, which have different, obviously, pocket sizes, but also different thinking around timelines, right? And so tokenization by itself changes that, and in a very market way. I would say, and it's created a space which nobody has really gone in before until today with the advent of technology. If you were to sort of take tokenization and try and change, for example, the existing stock exchanges, or I think that's where you start to run into a lot of issues, because the incumbent system in the traditional stock exchange world was really designed about 40 years ago, right? I mean, the really stock trading, electronic trading came into being in sort of, in the 1970s, 1980s, depending on where you lived. And that thinking hasn't really changed, because what was happening was that it was just building on the system after system. It wasn't redesigned. So to break through that incumbent infrastructure would have taken, I think, a lot of effort and a lot of time, and maybe without much success. It really requires the exchanges to think about how they evolutionize themselves. But what we saw was that tokenization potentially opened up a whole new space and an asset class that was traditionally for a different source of capital. But technology could actually take that and bring it down the long tail of a different set of investors. And I think that's where it's truly, truly powerful. And you've got to think, we had this debate, you don't need to fractionalize on blockchain, right? You can actually use a spreadsheet to do that. It's not that difficult. But if you want to fractionalize and allow liquidity at scale for the many, many 10,000, 100,000 investors, then you do need something more powerful than just an Excel spreadsheet.
Yeah, and Simon, you would agree with that. It's the power of it is what's built on top rather than the basic functionality of
Yeah, 100%. And I think there are also, other benefits. Again, I think we agree that it doesn't apply so much to the liquid space, although I think it's extremely interesting that WisdomTree recently tokenized some of their ETF products with the support of the SEC, which I think is pretty groundbreaking. From our perspective, we tend to see it affecting much more of the illiquid part of the marketplace, whether that's in hedge funds, venture, private equity, real assets, real estate, and so forth. For a variety of reasons. I think some of that is just once it's kind of digitized, the investor experience, the onboarding is a lot more efficient. I think that the ability to gain access, as Oyi said, in terms of fractionalizing it and making the denomination much lower, creates much more accessibility for qualified investors. I'm not sure, we go to retail, we don't personally go to retail directly, but through intermediaries, that can happen. So I think you've got access. And also something that's overlooked a little bit is collateralization. So what I mean by that is if you have a portfolio of some hedge funds or some venture holdings, the reality is getting credit on that, good luck. I mean, yes, it's doable, but it's going to take time. 6 months, 9 months, number of kind of credit committees at the investment banks and so on. Whereas through digitizing and holding these assets in digital wallets, the ability for a lender to get price transparency, be able to kind of value them and therefore lend against them at probably a greater haircut, I think is really increased. So it just provides a different set of opportunities to tap into.
So we're running a little bit short of time. I knew this would happen. There's so much to discuss in this topic, and we're probably not going to have a chance to reflect on what regulations we think might be coming down the track. I think we all see it on the horizon, right? But I particularly, with the last couple of minutes that we have left, wanted to turn to the two panelists who have decided to invest in Abu Dhabi and set up business here, just to find out why you've chosen this location. Why for doing quite cutting edge things in the fintech space? Why has here been the ideal location? I don't know if Mehdi wants to pick up on that.
So we had several options in the region and elsewhere, and we were a startup. That was exactly 2 years ago when we had our license, November 2020, so exactly 2 years today. And we were looking for a center that will understand what a startup is, that will understand the time frame of a startup. So we did a few analysis, and we found that ADGM is the right space for us. Our relationship with the regulator is great. Of course, they are doing their job, but they are doing it in a constructive manner. They helped us become a better company by forcing on us some processes and some infrastructure. And what we can see today, especially with what is happening around the world, regulation is good. Regulation protects the ecosystem. Regulation allows the investor to trust the company that has got a license. Let's not forget that. Our business as finance is a business of trust. When you know that there is a policeman that makes sure that things are doing correctly, when you know that investors' money remains investor money at any situation, that's what allows the system, the ecosystem to grow. Of course, there will always be here and there some small, average, or even large players who will not play by the book. But let's hope that this will be the exception, and what we are striving to look for here in ADGM is that, from what I have seen, is the system is stable.
Yeah, I mean, just to add to that, I think from a kind of digital perspective, I think the ADGM, Abu Dhabi, and the broader UAE, it has a tremendous competitive advantage. I know, I have an inkling for what kind of Singapore doing, and I think there's a similar kind of ethos. But really, when I think about the kind of traditional marketplaces in the world, New York, London, Switzerland, etc., I think they're stealing a march here. And so for us, it makes real strategic sense to be at the forefront of that wave, to be working hand in hand with the regulatory bodies, with the leadership, and to really propel and help develop the ecosystem with the full support of a group that doesn't have or isn't burdened by that legacy which so many other jurisdictions have. So I think it's a huge opportunity.
If you like, I have a comment as well. We sort of actually have the opportunity to speak to regulators actually around the world, the big financial hubs. And many regulators are sort of trying to understand that combination of regulation and market development. Now, obviously, in Singapore, MAS prides itself on being one of the best at combining these two perspectives, because it's not easy to be both the policeman and somebody who wants to grow a market. And I think ADGM seems to have that combination set up as well. The understanding of what needs to happen from a regulatory and the policing and enforcement side, but at the same time, the market development, which obviously supports fintechs like ourselves, because you see that proliferation and the ability to think ahead of what needs to be a global financial hub. I think fintech plays a very large core part of that discussion. So for the ADGM guys, I think it's a great combination.
Well, there you go. Some praise for ADGM at the end there. We have run out of time. We could talk for much longer, but unfortunately we can't. All that's left is for me to thank all of our panelists and everyone out there who sat and listened to us. Thank you very much.
Thank you.